The number one question I'm getting right now from clients is, what about this 50-year mortgage? And then we've heard Donald Trump talking about mortgage portability, and there's even other things that are being talked about. Are these good ideas? Are they viable? Will they happen? Let's talk about it. I have some thoughts on it. My name's Miles Pitcher. I own Superior Lending. I've been in the business since 2001. So let's take a look. All right, 50-year mortgage. So as we look at this, there's a few things I want to point out. So I have two charts here. The left is the 30-year mortgage, and then the right is a 50-year mortgage. You can see between the monthly payments, it saves the client $354 a month. That sounds great. Okay, and this is an example of a $500,000 loan amount, 6.25 example rate. I want you to take note of the total number of payments and what that total amount is. So right now where rates are, you'll be paying for your more at 6.25 on a 30-year mortgage, you'll be paying for your home twice over. We go to a 50-year mortgage, you're going to be paying for that home 3 times over. It's crazy. Look at that. If you just make the standard normal payments, you'd be finishing November of 2075. That's pretty nuts. Let me show you what I think is a better way. And what I believe, first of all, I don't think the 50-year mortgage will happen or get approved by FHA, Fannie Mae, Freddie Mac, VA. I don't think it's going to happen. We, in fact, have had a interest-only 40-year mortgage available for years now. I've never had a single client do a 40-year mortgage. So I don't think it's going to happen. Let me show you what I think is a better way of achieving what we're after, because obviously we're trying to get affordability down, get more home buyers qualified, and take some pressure off the home price or the monthly payment. So let's check this out. So what I've put here is what happens if the mortgages get the rates come down by 1%. And we're moving that way. We're coming down. Look at this. If we get the rates lowered by 1% from 625 to 525, the monthly payment gets really close to a 50-year mortgage. Look at that total payment number. It's quite a bit less than, it's not half, but it's a lot lower than that 50-year mortgage. To me, that is a better solution. And then one more thing that I don't think anybody's thinking about talking about in this is that the longer the loan term is, or the more you move out on the risk curve, the higher the interest rate needs to be. For example, 15-year mortgages have lower rates than a 30-year mortgage. Well, if we do 50-year mortgages, people assume we're going to be right at the standard 30-year rate for the 50-year mortgage. That's wrong. It would have a higher interest rate, negating a lot of the benefit that comes from being able to spread those payments out over 50 years. Okay, next one I want to talk about here is the portable mortgage, meaning you have a home right now that you have a beautiful 3.5% interest rate on. Let's just say the home's worth 600, loan balance of 300, and you want to take that mortgage with you to the next home, thus making it portable. So if you sell the home at 600, you're going to be paying some realtors, you're going to be paying title fees. So you're going to have your equity of $261,000 to move into the next home. Here's what people aren't thinking about. If you're moving homes, most likely you're going to be upgrading in homes, stepping up. So let's say the next purchase is $1 million home. If we take the equity of 261 plus the mortgage that sits at 300, the loan porting, that's 561 we're putting in the new mortgage. Where is the rest of the down payment coming from? There is, and I may be wrong on this, but I don't believe that Freddie Mac, Fannie Mae, FHA, anyone is going to just say, we're going to not only take your $300,000 existing loan, but we're going to bump up and give you an additional $439,000 at 3.5%. they would say, no, you need a whole new mortgage. So I call this an equity gap, and it is probably the biggest hurdle and biggest problem with this mortgage porting that we're going to run into. Just remember that current mortgages qualify on a couple of things. Number one, the buyer's strength, right? Their debt ratio, their credit score, their down payment. Plus, these mortgages are formed and attached to a piece of collateral, the current home, and that home has title work on it, has an appraisal on it. That's what secures the loan. I think there are way too many issues in addition to this equity gap with trying to flip debt from one asset, the old home, to the new home. Maybe there's a way to do it, but I don't think it's going to work. And I don't think people are understanding that this equity gap, the missing 439,000, really negates any benefit. So, okay. The next thing that is being considered by the Fannie Mae, Freddie Mac conventional loans is making conventional loans assumable. FHA and VA have had this in place for a while. We don't see a lot of them actually happen. It's a good idea, but again, the number one problem we run into in our FHA assumable loans is the equity gap. So let's walk through this. Say you were a seller, you have an FHA loan of 3%. Your home is worth 500, your mortgage is at 250,000 and you advertise to a buyer, "Hey, come in and assume my mortgage." Number 1, the buyer has to be owner occupying the property. Number 2, they have to take over the mortgage where it's at. They cannot add more money to that mortgage or that loan amount. So, where's the missing 250,000 coming from to purchase the $500,000 home? It's the equity gap. Most people don't have it. And therefore, it's a good idea, but not necessarily going to fit in the box for most people. I hope that helps, you know, looking at some of these things. I appreciate the ideas that people are coming up with to solve affordability. The reality is we just need some lower rates, and they are coming down. They are moving in the right direction. I believe they're going to continue doing there, but so far, I don't think any of these ideas will actually work or happen. If you have questions or thoughts, I'd love to hear them. Please feel free to drop a comment on what you think is going to work, what's going to happen, if it's a good idea or not. My name's Miles Pitcher. Here's how you can get a hold of my team. Love to hear your thoughts. Have a great day.